You're listening to The Money Hour with your host, Tina Mitchell, sponsored by Absolute Mortgage, a division of Pinnacle Capital Mortgage Corporation. Now, in the studio, local mortgage and finance expert, Tina Mitchell.
Welcome to The Money Hour on 570 KVI, the Sunday, April 20th show. I'm your host and mortgage expert, Tina Mitchell. I have a great show for you today. Questions or any information needed, please call into the show at 1-888-987-0570. Again, it's 1-888-987-0570 or online at themoneyhour.com. Thank you for taking time to talk money. I am here every Sunday at 11 a.m. right here on 570 KVI. I'm here to help you build a strong financial blueprint 1 week and one show at a time. For more information on topics discussed, please call the show at 1-888-987-0570. Again, it's 1-888-987-0570 or online at themoneyhour.com. And let's go ahead and start out with the show with a little money chat. I want to talk to you about my 8 tips to a successful closing. I will have to leave a little bit of a call to action here, or call the reason to contact the show, because in Money Chat, I don't think I have enough time to go over my 8 tips. But there are 8 tips. I'm going to get through as many as I can. And if you have interest in getting the remainder of them, pick up the phone, give me a call, or reach me online. If you're in the process of closing or getting ready to close, especially on a purchase, you have got to know these 8 tips, because I tell you what happens out there. I don't know what the percentage is, and I was actually looking for it as I was preparing for the show, and I couldn't find anything online, but it has to be a large percentage of people that are in the middle of the closing process after they've already been approved for a home purchase and their financing fails, or something drastic happens that delays the process and they don't close on time. Now, either one of those scenarios, they're really bad, and that's why getting a mortgage can be really stressful. But let me tell you what happens and the mistakes that consumers are making. It's not your fault. It's your mortgage consultant's fault for not communicating in a way that you can understand what to watch for. And here's what I want to tell you. It's the same thing that happens over and over and over again. So as long as you know what these 8 tips are, they're my 8 tips to a successful closing, and I've got all bases covered. There is only 8 of them, and if you know what they are, you can make sure that you don't make these mistakes, and the process will run smoothly on time. Your earnest money is not going to be at risk, and you're ultimately going to get your home. So here's the first 8 tips. Let's talk about our first of my 8 tips. Documents and turn time. You want to turn your documents around quickly. I don't know if anybody's communicating that with you or not, but there's no time to delay on the documents. I say within 24 hours from the time that somebody requests the documents, you want to get those documents turned around. Now, on the same hand, don't ask why you have to provide the documents. Here's some common sense, and I think if you look at it this way, we did have a mortgage crisis or a mortgage meltdown in 2008. Look what happened to our economy. The reason this happened is because documents were not being required. There wasn't the verification to ensure that consumers could actually pay back the mortgage. Well, that was not a good thing for any of us to be in, and it caused a lot of chaos in our environment. So that's changed. It is not your mortgage consultant, the underwriter that's requesting the documents, or the company that you're getting a loan for that's requiring this. It's the secondary market. It is the guidelines that are set up to protect you as a consumer and to protect our economy to make sure this doesn't happen again. So here's what would happen. If these documents are not requested, the underwriter could lose their job, and the bank that you're going with could possibly lose the ability to lend to future homeowners. So there's no need to ask questions to delay the process. Just provide all your documentation. And what I like to say is anything that you think that you might need to provide, guaranteed you will, and probably a little bit more. Second tip, updated documents. I have a lot of times that I hear clients at the very end of the process, not my clients, but I hear it in the office where clients are having to scramble at the last minute for updated documents. One of the most common and popular requirements for an escrow agent to have to ask for at the signing is before we can actually fund and close your loan, we need an updated pay stub. Now, you should never be asked for an updated pay stub at the last minute, because you should already know ahead of time that every single updated pay stub and asset statement, just keep on providing it. So from the time that you apply for a mortgage and you're in the process of closing all the way to the time that you close and get into your home, every updated asset statement and every updated pay stub that you receive, just keep on sending them over, because if you don't, eventually they're going to be asked for, and you may be running out of time at the end when it's asked for. So just keep sending them. My third tip, no new debt. Seems like it might be common sense, but a lot of people, they're approved for much more than they can actually purchase, so they think that there's room to incur more debt. Maybe you're not opening a new credit card. Maybe you're just putting more things on your credit card, or maybe you're opening a credit card just for a lower interest rate, but you're not going to be using it. My tip is no debt, no open credit card, no changes to your debt at all. And here's why. What happens? At the very end of the worst case scenario, you go buy a new car and your financing falls through. That's common sense. That could be a nightmare. But here's what people don't think about is you go all the way through the process and you open a new credit card, and what happens right before the loan funds, and again, this is just a requirement all banks have to do. They have a soft pull. The funding department, before they fund that loan, right before closing, they do what's called a soft credit report. Soft pull means it doesn't affect your credit score, but they're looking for any new debt. Now, here's what happens if you just randomly opened up a credit card, even though you didn't use any of that credit. It's a new liability. So what happens? It's got to go all the way back to underwriting, and you're stepping back a few days, which means that ultimately you're not going to close on time. That would put your earnest money at risk, and ultimately you could possibly lose out of that contract because you're out of contract agreement on your time frame. So make it easy and don't open any new debt until after you have your keys and move into your home. Fourth tip is life changes. So any type of life changes that you have, check with your mortgage consultant first. So first one would be job changes. You don't want to make any employment changes in the middle of the closing process. You also don't want to make position changes within your company without checking first. Here's what could happen. You're a salary employee, you're making $60,000 a year, and you have an opportunity to get what they call a promotion, let's say. Promotion meaning you're going in maybe to the sales side and you have the potential to make a lot more money. The unfortunate thing is it doesn't matter that you have the potential to make a lot more money. If you're going from a salary position and moving to a strictly commission position, you no longer have any income to qualify, which means your financing would fall through. Timing is everything. You can take that promotion, you can take a new job. You just want to wait and do it until you have keys in hand and you've moved into your house, because at that time you can make any changes to your financial situation you want as long as you make your mortgage payment. Then you're not at risk of losing that home. Also, if you plan on making any marital changes, I know that typically is not going to happen during a closing process, but it has. If you're going to get married or divorced, you want to make sure that you communicate that first, because it would have a complete change in the process as far as the documentation that's going to be required, and you don't want that to come up at the very end. Deposits, I want to talk just a second here, so I'm going to try to cram these in really quickly. Deposits into your account, just know you have to verify everything, so make sure you're paper trail and documenting all of your funds and where it's coming from, and that puts in tip 6 and 7 into one tip so we can save time. I want to give the last tip. In the middle of a closing process, if you plan on leaving town over an extended weekend, you want to make sure that you're communicating this, because there's a lot of activity that's going to take place during the closing process, and there's nothing wrong with taking a vacation. You just need to make sure that you're communicating that up front so that your mortgage consultant can determine whether or not the timelines can be adjusted to make sure that there's not going to be at risk of you not closing on time. I'm really here as a mortgage expert. That's what I do. That's all I do. And I have experts that represent everything else regarding financing. But I tell you that there's a lot of important things that happen during the closing process. And the worst thing you could do is jeopardize the purchase of your new home. If you have any questions, pick up the phone. Give me a call, 1-888-987-0570. Again, that's 1-888-987-0570. Woo! Made it through those 8 tips. Coming up next in the Money Hour, are you part of the American tax filing majority who is about to get a tax refund? If so, how do you spend it? Janice Hammond, owner of Sunrise Financial Services, right here on 570 KVI after this short break.